Hey, what's up, stock compounders? Brad here. So it is that time again for my weekly Q&A. Thank you to everyone who submitted a question. And Frank, I was mostly joking on this. Hopefully there's no hard feelings. So let's jump right in to the Q&A. Curious on the strategies when the market crashes. Monish has said he will not sell due to the market fluctuation, but only when the company has fundamentally changed. I would be curious to learn your thought on what will you do when the market crashes. Will you use hedging strategies to hedge your loss or simply pile with cash and buy businesses that are on sale? That's a great question. It's a question I get often. So I like what Monish says in terms of micro trumps macro. Okay. I'm looking for businesses that I can own for a long time and I'm comfortable with the purchase price. So I don't play, what the market is going to do because honestly, I have no idea what the market is going to do. Even if the market is higher than it's ever been, um, I don't know that it's going to crash tomorrow. I don't know that it's going to crash in a month or 6 months or a year. I have no idea. So I just leave all of that out of my strategy. Um, but if the market does crash, you know, I'm not going to have any hedging or anything like that. But I will definitely be plowing money into really discounted businesses that I've wanted to own for a while now. And I'm going to come out, it's got to be this week, guys. It's got to be this week. I'm going to come out with my wish list, right? Companies that I'm eager to buy if the prices come down a bit. So that's really what I'm going to be doing. I'm not going to be trimming anything. I'm not going to be selling anything. I'm just going to be buying stuff very excitedly as things go on sale. So that's the plan with that. If you could create a fund that clones super investors, i.e., buy when they buy, sell when they sell, who would be your top five investors to clone? I love this question. This is something I've been thinking about creating a cloner fund. And this is something I need to think more about. Who would be those five? Monish Pabrai is at the top of my list. Lee Lu, but I really want to find some investors who are managing less money. Um, Pabrai seems to be able to buy pretty small things. I mean, he just bought Shinnekin in Japan, right, with a market cap of something like 300 to 400 million. So, that small size didn't prevent him from buying in. Li Lu manages quite a bit more capital. I think it's like 13 billion as opposed to Pabrai, who's somewhere around maybe 700 million. But I need to think a lot more about that, and I'm excited to think more about that. Which handful of super investors would I clone? That's a great question. If you guys have any favorite super investors that you would clone in kind of a shameless cloner fund, let us know in the comments. And I am committed to putting out a video on this topic because it's something I want to have a good answer for myself. So thank you, Joshua. How often do you reevaluate your companies that you own? And would you rather invest in a new company or buy more shares of the companies you own if there's a market downturn? So how often do you reevaluate the companies you own? It's not like I have a set amount of time where I kind of reevaluate everything. For each business, I'm kind of keeping an eye on things for that moment when the story changes, right? But I like what Pabrai says about this. If the business is getting better, right? Is the business better this year than it was last year? If so, forget about it. Valuation doesn't matter so much. We want to own businesses that are getting better every year, and that's what's compounding our portfolios. So I don't have I don't go on like a kind of a set time frame with reevaluating. Would I rather invest in a new company or buy more shares of the company I own? So I'm going to know the companies I own much better than a new company. So, if it gets really down to a really compelling price in terms of a company I already own, I'm much more interested in adding to that position than I am to buying something new. Like Pabrai said, I think in a couple lectures ago, the mistress is always hotter than the wife, right? But the reason for that is we don't know much about the mistress. It's easy to look at the mistress and see this perfect specimen, right? Because we don't see all the flaws. We don't know what the flaws are yet. So it's the same thing with companies we own versus companies that look like potentially compelling investment opportunities. You mentioned you opened Interactive Broker account for your kid. Did you open it under your kid's name, and how did you do it? Or are you using your name and made them nominee? So I haven't done this yet, but I plan to create a UGMA account. Okay, I forget if it's UGMA or UTMA. There's one that's kind of being phased out, and the other one is kind of the choice these days. I know Pabrai did that same structure for, I believe, his kids, UGMA. So that's what I'm going to use through Interactive Brokers. Right now it's just in my name, but I'm going to transfer that over to, my daughter's name in a UGMA account. How has your analysis on Shinnikin been coming along? A little slow. I'm going to do a video soon about Shinnikin. I'm still kind of really digesting, the full investment thesis and the management team and all of that. So I'm going to put something out on that within the next couple of weeks. So more on that soon. What do you think of this? Heard him talking on another podcast called Value Investor TV on Apple Podcast. So I did click this earlier today. It's an MOI Global Talk, Manual of Ideas talk on Daily Journal Corp. Okay. Of course, Charlie Munger is on the board of Daily Journal. And it was an interesting investment thesis for Daily Journal. It's easy to look at Daily Journal, through the 13F filings and see, a couple of banks, and I don't remember, there's like 4 positions that it seems like they've owned forever. But it actually seems like there's more happening behind the scenes with Daily Journal in terms of some technology investments. So that's a little bit intriguing to me. I think Investing with Tom put out a video not too long ago on Daily Journal. I don't think I watched that one. Maybe he mentioned some stuff in there about this. But, if you guys are interested in Daily Journal, check out this video here. It's the YouTube channel of the guy who pitched Daily Journal at Manual of Ideas. So I don't even think it's widely available, but this guy made it available through his YouTube channel. So if you're interested, check that one out. I think I'm going to dive deeper into it as well. Hey Brad, how do you calculate the downside or risk of a potential investment? What is your accepted risk level? So this is a fantastic question. I mean, I feel like the first thing we need to do as value investors is, with any investment opportunity, try to figure out what is the downside, right? What is my risk of losing money? And what is the probability of that happening? So it's, calculate might be a little bit too, left-brained here. But it's really, what are the prospects of the business, as Monish Pabrai says, over the next 5 to 10 years? And how is that industry likely to unfold? And in a lot of industries, that's too hard. That's too hard of a question to actually, come up with any kind of conviction around what that's going to look like. And, at that point, it's probably a pass. So, you want to look at kind of debt levels. That's a big potential, you know, vulnerability for a company. Well, let me refresh this here. Um, so debt levels, you want to look at the management's track record. That's not floating now, of course. Let's get this to float. Investing with Frank pointed this one out to me. Pretty excited about that. Um, so, yeah, it's really understanding the business. When you understand the business, you understand what can go wrong with that business. And of course, a big part of figuring out what your downside is what price are you getting the investment at? What price are you able to buy the stock at compared to, what is the value of that stock? And if you have a big enough margin of safety, you're in a pretty good position, even if it's not the greatest business in the world. Um, you know, I think it's Howard Marks who said, you know, great businesses aren't necessarily great investments. Okay, you can buy kind of a crappy business, and it can be an even better investment than a great business, assuming you get a fantastic deal on it. Okay, so the price you pay is very important compared to what the thing is worth. So that's how I'll answer that one. Apart from liquidity issues, are there significant downsides to owning Shinnikin via the OTC market? For example, what are the chances that Shioff will not follow closely the price action of 8909, which is Shinnikin in the Japanese market? Yeah, I don't know. I haven't looked into Shioff, so I don't know that there may be ADR fees that you're going to want to factor in when you're comparing buying Shioff to buying Shinnikin through the Japanese market. But it's not something I've really looked into. I'm curious though. I'd like to learn more about that. So if any of you have looked into this, let us know in the comments. That'd be awesome. My boy SC, do you have any new thoughts on a rules-based, no-work, literal cloning portfolio as opposed to idea generation? Such as how many investors to clone, how to determine conviction, coffee can or 13F, how many positions, when to rebalance, what would be the predetermined framework for buying and selling? If you took a turn your brain off approach, would you leave a portion to actively manage? And if so, how much? Great questions. I love this question. I haven't, but it's interesting that there's two questions around that here. This one up here. Create a fund that clones super investors. So thank you guys for the nudge on this. I do want to put some thought into this. How would I set up a shameless cloner portfolio? I think it would probably be around a handful of investors where, I really know their approach well. They've put out a lot of information about how they invest. So I can kind of be confident that I have some sense about how they're selecting companies and what their process is. They've got to have a track record more than 15 years. I'm tempted to say more than, at least as far back as the dot-com crash, okay? Because I really want to have two crashes that these investors that I'm cloning have been through, okay? That way, if I'm looking at their compound annual growth rate for their fund, it includes those crashes. I think that's important. That way I'm not cloning investors who are, really just taking on a lot of risk to get outsized returns. But yeah, it's something I'm going to think more about. I'm going to do a video about this one. So I appreciate these questions about the shameless Kaellner portfolio. What do I do with all this cash? Well, it's a great that you're in that position to have a bunch of cash that's burning a hole in your pocket. Where do I put it? What helpful beginner investing tips, book recommendations would you give to a kid turning 18? Love that question. Tips for gaining confidence to put more money down when a bargain comes. Yeah, these are fantastic questions. What do I do with all this cash? Well, there's two approaches. If you want to take a more of a passive approach and buy index funds, just decide, all right, over how long do I want to deploy this capital? Say it's 3 years, okay? And you've got, $30,000, whatever. 10,000 a year, maybe 2,500 every quarter. You're putting into index funds, whether that's SPY, whether it's an emerging market ETF, which we've covered some of those in the Ray Dalio video recently, or if you want to pick stocks. I mean, really, you're just waiting until something smacks you across the head like a 2x4, and it's obvious that that's a great investment opportunity. Then you go in 10%, 20%, whatever your, however much of your portfolio you want in each idea. So that's what I would say with that one. What helpful beginner investing tips, book recommendations would you give to a kid turning 18? Well, I would say get started. Okay, maybe give yourself a month, maybe even less, maybe 2 weeks to figure out the first stock you want to buy. All right, and just go hard for 2 weeks, a month, trying to figure out, okay, which stock am I most bullish on in the entire maybe U.S. market, or if you're in a different market, just decide, all right, I'm going to buy something after 2 weeks. Give yourself that kind of time constraint, and because you've got to realize the big learning happens after you become an investor, after you make your first investment. Because once you make your first investment, it's a whole different ballgame. Okay, it's not theoretical anymore. When you've got money on the line in a stock, the emotions are going to come into play as you feel this thing. You're on like a bull, and it's going up and down, and it's a ride. So you're going to learn a lot about yourself after you make that first investment. It doesn't mean you need to put your life savings. Definitely don't put your life savings into that first stock, but put something meaningful in. Maybe not $10, something that you're going to feel if it starts to move around a lot. So that would be my advice. Get in the game. Tips for gaining confidence to put more money down. That's just experience. As you understand more and more what you know, what kind of businesses you understand, you'll get that conviction when something great comes along. It's just practice. It's time in the game. So that's what I would say to those. Love your channel. Thank you. Do you use Rule 1 calculations before buying into a company, or do you only do DCF? I don't really use Rule 1 calculations. I appreciate kind of some different frameworks for calculating value. But yeah, it's primarily DCF, discounted cash flow analysis. And it's really got to be owned by a super investor that I follow, that I trust, that has a great track record. So, I mean, that's bowling with bumpers. Critical to do that, I think. There's so many ways to get burned in the stock market. And if you can have that kind of lighthouse, that super investor that says, okay, I've vetted this company. It doesn't mean it's going to be a home run. It doesn't mean it's even going to make money. But there's that kind of extra layer of protection that a great investor has voted with their dollars on this company. Once you've completed your research on a company that you're looking to purchase, do you write yourself a thesis before you make a purchase of that company to go back and review in times when the company may not be performing as you had thought? If you do, what do you include, exclude? Are there any fundamental quality ratios that you look for before you purchase a company? For example, return on invested capital consistently above 10% per 5 years, return on equity consistently above 10% per 10 years. So I don't really have any rules of thumb like these kind of metrics towards the end here. Do you write yourself a thesis before you make a purchase of that company? I don't really. And it's a great idea, though. I need to start doing that. Just to have something on paper where I've documented kind of my thought process around an investment. And I can, check on it. I can, every 6 months, every year, however long it is, I can kind of remind myself why I bought that company. Okay. And then I can look at that company and, just measure the current state of the company against my original investment thesis. I think that's a very useful exercise. So thank you for that nudge. Growth at a reasonable price, investor. That's probably a very wise thing to do. Like Magic Formula portfolio, do you also experiment with free lunch portfolio? If so, what's your learning been so far? So I have not experimented with the free lunch portfolio. Okay. It's something I'm kind of watching from a distance. I'm actually more excited about the Magic Formula portfolio potential than I am with the free lunch portfolio. I can get into reasons for that if you guys want in the next Q&A. In Buffett's annual letter, he mentioned blind picking 50 S&P 500 stocks will likely do well over the long term, so long as there are no changes to the initial positions. I was wondering if this is something you would be willing to try or even try with a basket of potential spawners. Do you think this could be a good way to deploy a small amount of cash in the market if you see nothing worth buying? It's hard for me to get excited about blind picking 50 companies from the S&P 500. I'm wondering if you might reference where Buffett said that. It kind of surprises me that Buffett said that. Is this the most recent annual letter? And what does it mean do well over the long term? Does that mean outperform the market? Like, how likely is that? I haven't heard that before. It's kind of interesting. I think both my methods of kind of my modified Magic Formula portfolio and kind of the largely shameless cloning approach that I've been using is going to outperform blind picking 50 S&P 500 stocks. But it's not something I'm that interested in testing, but I would like to know more about, in what context Buffett said that and what he sees there. That's not something I've heard before. My question is about cyclical business. What would be your sell strategy, assuming it's a great company? Would you hold it through several cycles or sell when the cycle peaks and then try to buy again when the cycle bottoms? So really, I'm not a big fan of trying to time companies, time the cycles, get in and get out. I want to own a great business and hold it for as long as possible, okay? As long until the kind of investment, as long as the business is no longer getting better, right? If the business stops getting better, it's probably time to sell. That's kind of my framework right now. it just sounds stressful trying to get in and out of a cyclical business. That's not my game. Retro Ranger, no question, just new insight. I found another Pabrai fund, Dando India Zero Fee Fund. You can check in ticker with Kolte Patil. It's a stock he seemed to own since 2017. Never heard of it. Perhaps this gives us new stock ideas in the future. So Kolte Patil, I don't even know if I'm saying that right. Company in India. It is a company that, he had held. I've seen it in his portfolio multiple times. I don't remember if that was on ticker, if that was just through other sources. But I imagine if it's no longer in ticker, there's probably been a change in his story for the company. But yeah, I'm going to take a look at that and see what's going on with Pabrai on that real estate. I'm actually not. And the reason is I don't know how to invest in India, okay? I don't know how to get access to that market. So if it's a company I can't buy, to me, it's just not a great use of my time to understand it, to know more about those particular Indian investments for Pabrai. But it's cool that there do seem to be a number of funds that Pabrai is managing. So I would like to unpack that a little bit. Yeah, Frank. Love you, Frank. What's your standpoint on buying an ETF to cover a field area where you expect value and growth but are not knowledgeable enough to decide on single stocks? This is a great question. I haven't done it. That's not to say I wouldn't do it, okay? If say we're in the middle of a stock market crash, right? And in a stock market crash, there's so many opportunities. There's not enough capital to put into all of these opportunities that arise. And it's possible that there's an area where prices are clearly depressed, and I want to invest in that area, but I don't really know who the winners are going to be. In a case like that, an ETF could be a fine way to go. I definitely want to make sure the fees are very low in that ETF, probably less than 50 basis points, something like that. Yeah, I'm not opposed to it. It's probably unlikely that I would invest in an ETF because I'm just more comfortable going after individual businesses. How can I register on Ticker Terminal? So thank you. I put a comment right down here with my link, and you guys can all use this link. This is, my kind of referral link to Ticker Terminal, and I don't get anything for this at the moment. It's possible once Ticker starts charging, when they're out of their free beta version, that I'll get a kickback for referring people, but it's possible that I won't also. So I don't have any vested interest in you guys using this referral link. There's plenty of other referral links out there floating around. What are your thoughts on Etsy? Did you ever take a stab at it? So I have not taken a stab at Etsy, but one of the tabs open on my other computer right now is this write-up on Etsy from Sabre Capital Management. And I found out about Sabre through Twitter, okay? They seem like, long-term kind of value investing, similar orientation to what I have around investments. And they wrote like a 50-page report on Etsy. Etsy is an interesting business to me. It's obviously it's not cheap in terms of traditional value investing standards, but that's okay. I'm trying to expand my mind around not just focusing on cheap businesses, but focusing on great long-term businesses. I do believe Etsy is already quite big. I don't remember the market cap off the top of my head, but it's probably bigger than kind of where I'd be looking to get in to that kind of a company. But, I think I am going to dive deeper into this write-up on Etsy. Because who knows? Maybe it'll be facing headwinds at some point, and there'll be an opportunity to get in at a much lower price. Last one. Why is Monish Pabrai is better than Nick Sleep in your opinion? Have you read Nomad's letters yet? If yes, what major insights did you get from it? Thanks for that mention about my channel there. So I have not. I've printed out a number of letters from Nomad Partnership, but I haven't read them yet. Guys, I have 2 very young kids, and it's so much easier for me to just listen to something like a podcast or a YouTube video versus like sitting down and reading something. So actually, one question I had for all of you, especially you tech savvy viewers, is there a way for me to take a PDF and convert it into an audio file where, I don't know, one of these, whether it's Alexa or one of these robo voices reads the PDF so that I can just listen to it rather than having to read it. I don't know if there's anything like that available, but this would be at the top of my list of things to listen to is an audio version of the Nomad Partnership letters. So if anybody has any tips on that, let me know. But I've not gotten very far into the Nomad letters. Thank you for the reminder. It's probably, at this point, the best use of my time in terms of deepening my investment wisdom to read these letters. I mean, considering the impact they had on Monish Pabrai, Pabrai said something like, after reading these letters, he realized it was a radically improved system than what Pabrai had been implementing for the last 20 years. So, that speaks volumes about these Nomad letters. So thank you. I need to dig into those and probably make a few videos as I go through those just to kind of cement the learnings into my brain. So anyway, guys, these are such great questions. I feel like every week the questions, they just keep getting better and better. It's a lot of fun for me to do this each week. So thank you. Keep them coming. And with that, guys, I will leave you all till the next video. Take care.